If you have income from any type of offshore source, be it interest, dividends, or any other form of income earned offshore, then you may claim a portion of any tax deducted offshore by the foreign country. This is provided that SARS has a DTA with the foreign country. SARS will, however, limit the amount of your tax claim to what tax would have been deducted had the income been earned here in South Africa. This limit is called your Section 6 quat limit, and in its simplest form it works like this. Let's say you earned 200,000 Rand locally in South Africa and paid no tax on the 200,000 Rand. Let's say you also earned 150,000 Rand foreign interest from an offshore bank account, and let's say that 40,000 Rand in tax was deducted overseas. How much of that 40,000 Rand tax deducted offshore will SARS allow you to claim as a foreign tax credit? Let's have a look at the formulas that SARS uses. In our example, we can see the foreign income of 150,000 Rand earned offshore, foreign interest for example, and we can see the equivalent of 40,000 Rand in tax deducted overseas. On the income screen, we can also see the 200,000 Rand income earned locally and zero tax was deducted on that 200,000 Rand. Let me bring over the auto summary screen showing all the bottom line figures. We have a total of foreign plus local income of 350,000 Rand. SARS's tax table show that the tax due on a taxable income of 350,000 Rand would be 77,539. To determine how much of the 40,000 Rand tax deducted offshore will be allowed as a claim, we simply proportion the tax due on the total by the portion of total income earned. This means 150,000 Rand divided by 350,000 Rand multiplied by the 77,539 Rand tax due on the total taxable income of 350,000. SARS says that would mean the 150,000 earned offshore would have attracted tax of 33,231 Rand if the 150,000 would have been earned locally, and so as per 6 quat the limit we can claim is 33,231 and we have to forfeit the balance of the 40,000 Rand tax deducted offshore. Note that the amounts for foreign income and for local income in the formula must be taxable income amounts. I have used simple examples to illustrate how 6 quat works. It can get more complicated in cases where a taxpayer also has income from foreign capital gains, but fortunately we have tax software calculators available in South Africa that will factor in all these various income and allowable deduction amounts and do all the most complex 6 quat calculations for you.